Exactly. Well, good to speak to you both.
Oh yeah, you as well, Greg. So Steve, you fat fingered a trade on that? Is that what it is, or you just didn't realize that was going on?
I think I fat brained. I know I go with E-Whispers. You know, they have all the earnings, all the primary earnings. I always trade the biggest stocks, so they're always on the E-Whispers earnings calendar. You know, and if I have questions, I'll Google it and search, and then on top of that, my CNBC app will prompt the earnings if it's on my watch list. But, you know, I hadn't looked at my full watch list that day. I was just looking at the charts, and Monster Energy, I bought it going into the earnings accidentally. First time I've ever done that yesterday.
Well, I guess it's a good lesson just to take that 3 extra seconds before you place a trade. I told you about the worst trade I ever had, and I did the exact same thing. I mean, it was horrible. I think I told Chris or I told Steve, but I was long 2 contracts of the yen, and I had a nice little trade on, and I decided to take half off. So I hit 1 and just hit sell and just walked outside. I came back, and instead of selling 1 futures contract, I sold 100.
Oh gosh.
Oh, jeez.
So now I'm 98 contracts, full contract short. I came in, there was like a $68,000 loss. It's like, what? What do you mean? And then it dawned on me, and I was like, okay, you got to cover. And I couldn't get my hand to the mouse to cover. And it was right before the Bank of Japan was announcing something. And I mean, just bad luck and good luck. Right before I went, because, you know, I was just in shock. And so I went to cover. I couldn't move my hand. I finally got my hand to move, and there was an instant big down move, and I ended up losing like $2,200.
Oh, wow.
Could you imagine being 98 full futures contracts short of the yen?
No, that's a different level of leverage. That'd be like buying 100 option contracts. You want to buy 1 or 10, you buy 100 options of leverage. My gosh.
I mean, I had a nice trade. I came back in. I was expecting to see a profit. It's like $68,000 loss. But you know, the irony is, this was back when I smoked. I went outside when this all happened to have a smoke. And I smoked half the cigarette and came back out. If I would have stayed out there, just smoked a whole cigarette, by the time I would have come back in, I would have been up about $200,000 on the position because it went crashing down.
And then you would have thought, oh, this was the greatest trade ever. I knew exactly what I was doing, right?
A half a cigarette was between the worst and the best trade in my life.
I mean, that's kind of stuff to make you physically ill.
Oh, I couldn't move.
You throw up, yeah.
I couldn't get the mouse. And then when I went from a $68,000 loss to $2,200, I was ecstatic. I actually ran over to my neighbors and had a beer.
Oh, the stories.
Oh yeah. So I guess the takeaway is take that extra 5 seconds, make sure you're buying instead of selling or selling instead of buying, and that the quantity's right.
You know, I had something similar happen to me recently. I can't remember which stock it was, but I put on a credit spread, and I didn't think anything of it. And then immediately afterward, I'm looking inside Tastyworks, and it has this little D next to it for dividend. And I was like, oh, okay, well, I guess that's no big deal. And then the next day it opened down, you know, the amount of the dividend, and it was like well deep in the money. And I'm like, if I had not taken 5 extra seconds to just look if there was or wasn't going to be a dividend tomorrow, then I would have had this issue. And now I got to deal with this and close the loser. And I was like, what a pain in the backside. Not to the extent of Greg's $68,000, but still was a pain nonetheless.
I think the only thing I had close to that level, I mean, it was I went to buy 1,000 shares. I think it was TZA or TNA when they were trading like $10 a share or something. I went to buy 1,000 shares or something, and I bought 10,000 shares.
Oof.
And then walked away. And lucky it was just a little bit of a win, but man, that was a 3 times leverage ETF, and it was 2008, I believe. So that could have been crazy.
It happens to everyone. And I think the one that happens to most people, like everyone I've ever discussed this with, it's if they're short and they're normally a long side trader and they go short and they're like, it's going up too far, I got to get out. And so they hit sell.
Yeah.
So that they double up their short when they're really trying to get out of the position.
Oh, that makes
that
sense.
many times.
Have you, Steve? You've done it?
I've heard it many times because you try to reverse. Originally it's kind of like, wait a minute, I've got to sell something I don't own, then I got to buy it back, and it makes people's brains hurt. It's like trying to reverse the order.
Yeah, it's just muscle memory. It's habit. It's just you sell to get out. Yep. Yep. Crazy stuff. Good day today, huh?
Wow. I think I'm at all-time equity highs intraday today.
Oh, it's fantastic.
Those are some big moves for just 3 positions on.
You have Monster and Space or Spice. I'm never sure how to, and IWM.
Yeah, IWM is a pretty large trade in my IRA. It's pretty good, sizable dollar amount.
Oh, nice.
Yeah. I actually just got out of a long IWM position 3 days ago when it was on its way down. I was like, I'm gonna get out. It had gone below the 10-day EMA. What day was that? The 6th. Yeah. And so I was like, all right, I'm gonna go ahead and get out. And then of course, immediately rocket reversal.
Yeah, I think that's what I got stopped out on my IWB trade. On the same day I got stopped out on the 10-day. I think it was on the 10-day and the 50-day intraday. I got signaled 1050 crossover in IWM to get in. Like, well, that's great. Get out of one to get into the other. But
yeah. Yep, that's right. That's right. So what are we talking about today?
Hey, I think we're already doing it.
Yeah, we are. We definitely are. I am bewildered. I mean, I'm bewildered that the market has had this kind of rally. I mean, I'm kind of bearish anyway, and I take my signals when I take them, but I'm sure glad that I'm price action trading instead of Greg's opinion trading.
Yeah, I know what you mean. In fact, the last 3 sessions have really made me nervous because it's like it'll gap up and then go down, gap up and then go down, gap up and go down. And yesterday afternoon, I sent out a text to my people and I was like, I'm going to go ahead and just take out all my long positions because this like weakness in the close is really making me nervous every day. And then of course, it's up 2% today. So I don't know what that was about, but I wanted to err on the side of caution, like you were talking about there, Greg, not go in as deep as I normally do.
Can you imagine telling somebody we're gonna compete with the Great Depression, except we're gonna do it faster and have some of the worst macroeconomic numbers in history, and we're gonna get back and the Nasdaq's gonna be positive on the year? I mean, who would even believe you if you tried to tell them that?
Oh, who would believe any of this? If 4 months ago I told you that everything was going to be shut down, the market was going to lose 35%, you weren't going to be able to go out of your house. I mean, you thought, what are you writing a script for a movie? and then the market would rally. I mean, I've walked around in a fugue state for the last 3 months, literally or 2 months, trying to figure this out vis-a-vis the market and life in general and what's going to happen, or are there any consequences coming down the line, which I can't imagine they're not, but that's just my opinion. I don't know. What do you guys think?
I think it came down to what me and Chris talked about on the oil podcast is liquidity. If the Treasury's loading up trillions in debt and the Fed's willing to buy all the Treasury bonds and the Fed's willing to print whatever money it needs and create liquidity in any market, meet municipal bonds or injecting banks and loaning, and the politicians will give away trillions. Like it's like a game of Monopoly where all the money goes back in the pot and whoever lands on free parking gets it. So everything just keeps going and going and going. And they have no fear of currency devaluation or collapse for the U.S. They have no fear of the deficit becoming unmanageable. So it looks like, if liquidity is not a problem, that was the biggest problem in the Great Depression. You couldn't go print gold. I mean, the dollars are still backed by gold, and they're just flooding the liquidity. And, the poor perma bears, God have mercy on their soul. They cannot understand this. They've been bearish since 2009, 2008, and they still can't, even during a depressionary economic collapse in employment, and government and companies shutting down, and countries could default, states could default on their debt, and they still can't get the stock market to collapse because the Fed and the politicians just will not allow it.
It's so true. But I mean, are there not unintended consequences of something like this? It just seems like, there's always an equation. There's two sides. I don't know. I spent a lot of time thinking about this, and I can't come up with an answer, but my gut is there has to be some kind of unintended consequences, but I don't know. What do you two think?
I think negative oil was the first consequence. Negative oil, and really all the risk is on the U.S. sovereign debt and the U.S. dollar as a going currency. That's where they've shifted all the risk to, as long as those things hold up. But like you said, the risk of oil, like you literally would have to pay someone to take your tanker of oil or take delivery on oil because it's all backed up to the whole supply chain. I've seen maps supposedly where there's all these oil tankers that are backed up around the world that can't even unload their oil. I mean, that's one of the first liquidity crises because, you shut down transportation, airlines aren't 95% of airlines aren't flying, people aren't going to work. Worldwide, and then you don't need oil to refine the gasoline, so you don't need to keep the flow going. So they stopped the liquidity in the supply chain of oil. So I think that was one of our first true liquidity crises. But like you said, Argentina could very well have a sovereign debt default during this too. So, and the weakest companies like J. Crew going bankrupt. So I think we are seeing some of the first little consequences of this liquidity crisis for money flowing in the right direction.
Yeah, and this, my concern is like the longer term aspect of this for like, Steve, this is like what you and I talked about last time. It's like the economy shut down for, just starting at 3 or 4 weeks, and then all these companies and things are going out of business. And that really started to pique my interest. Like, if we can't do 3 or 4 weeks, what's going to happen? And now like Texas is opening things back up, and I'm actually more scared now. I was talking to my wife yesterday. I'm more scared now than I was before, because now you've got all these people out there who are going places because they think it's safer, but there's zero decline on the deaths and infections and everything else. And it's like you're now releasing the population back out when there's nothing changed as far as the virus goes. And I'm sitting here and I'm like, it's going to get worse. It's going to get significantly worse. And then you have all these businesses that are opening, and they can only open at 25% capacity or whatever it is. And somehow they're supposed to maintain margins on having a quarter of the people they could in the store. It's crazy to me to think about. So yeah, I'm just kind of sitting here twiddling my thumbs. Like, I don't really want to go out, even though we can. I don't want to.
Yeah, I don't blame you. There's just, pluses and minuses to it all, but yeah, it's scary. And I mean, you talk about, getting back to maybe 25% of their clientele. I mean, how does a restaurant that it's hard to make money in a restaurant anyway at full capacity be able to make it at 25%? And then, I mean, how are they just going to increase the prices of the food so much? Are they just going to run at a loss? Are they going to have enough to pay their rent? And, then is their landlord going to be able to pay? I mean, I don't know. These are the things, because I was in the real estate business and landlord for many, many years. And I just thought, boy, how would this work? But I guess with the stimulus and this, it helps. But is it just a stopgap measure? And when it's over, is that when the rooster's going to come home to roost? I don't know. These are the things that I think about when I'm hiking around the mountain.
Yeah, it's like winners and losers. There's people that are sitting at home on their laptops, work from home, getting full pay. White collar workers, they're doing great. Then there's landlords in New York City. They're under a rent strike where they have to have their money to pay for their larger mortgages on their buildings, and they're not getting, their renters aren't paying them. So that's a liquidity crisis for them. And it's the winners and the losers. There's people, haircutters, that are starving, that can't get unemployment because the systems are crashing on the websites. They haven't been paid months, and they're getting put in jail for trying to go cut hair. And they're trying to support their families.
Oh, I know. Like the lady with the nail salon in Texas, right, Chris?
Mm-hmm. you know, these people, like, it makes you appreciate all the things that you don't have when it's taken away, right? I haven't had a haircut since like January. It's literally the longest it's ever been in my life. And my wife, she just cut my kid's hair the other day. She got my beard clippers and, you know, went off over both of them. And she was like, "All right, your turn." I was like, "I don't think so. No, I'll just keep it long. I'm not ready to go for the buzz cut yet." I mean, I still have a little hair left on my head. I want to keep what I have for the moment.
Yeah, exactly. I shave my head, so that's one issue I haven't had to deal with for sure. Have you guys gained weight or lost weight during this?
Oh, good question. So in my house, both of my kids have put on weight, and it's noticeable. And my wife said that she's gained weight, and I've actually lost weight. I've lost 7 or 8 pounds at this point. But for me, like, I've been doing intermittent fasting for a long time now, and it's so much harder when you're at home surrounded by people eating all day, and the pantry's 6 feet from where I sit. And so now it's like I need my discipline twice as much, more than ever. But yeah, I've actually, I'm the lowest I have been since I was a senior in high school right now. And I was telling my wife about it. I was like, "Hey, I lost 5 pounds." And she's like, "Well, I found it. Thanks a lot."
Yeah, I was lucky with my safety margin. I went vegan for health reasons about beginning of last year, 2019, and I lost 50 pounds.
Wow.
Never felt better, but I gained back 5 in the first month of quarantine, and I quit weighing after that. I was weighing about once a month, but you know, I don't eat any animal products or cheese or anything like that. So I have a huge safety net for eating, snacking on other things, fruit and vegetables, and some things. So, but it's just such
that's fantastic. 50 pounds?
Yeah, I didn't even know I had that much to lose. But yeah, I had some. Yeah, I've got had some health issues. That was the easiest way to solve them all.
Wow, that's interesting. You know, Steve, I was a vegan for about 14 years. And about a year ago, I switched back over.
I think I started vegan when you stopped.
Isn't that something?
But it's so easy nowadays versus right after I become vegan, they came up with like Impossible Whoppers. You know, if you don't have a grill, they're vegan, and then they have all this Gardein. Of course, Beyond Meat. That's one of the things that really drew me to Beyond Meat as a stock as well, because I understood the industry. Because it like exploded within months of me going vegan. There was all these crazy options. Well, that was easy.
Wow, this makes sense now. When I would hear you talk on your weekly newsletter about Beyond Meat, I noticed a bit of emotion when you were speaking about Beyond Meat. Now it's all making sense.
Yeah, I watched several documentaries about it. It was really, I've always been a big animal lover, so that really all clicked for me with health.
Sure.
But you know, you got to make sure you have, you know, the protein. People think protein from animal products, when really it's amino acids that can come from all kinds of different sources, and that's where vegetarian animals get them from. You know, so it was a fascinating journey though, but it was real nice to lose all the weight easily, pain-free, and all my blood test numbers turned around.
And you feel better?
I never felt better in my life. Aches and pains went away. Of course, I was in the zone for so many years, the zone, very serious scientific zone where you eat a mix of 40-30-30 protein and carbohydrates. So I implemented that into a vegan zone. So I made sure I had enough protein at every meal and mixed nuts and beans and different things, and worked out great. What
about Holly? Is she doing this?
Yeah, she did it for about a year. She's pescatarian now.
What's that?
She just eats fish for the most part for any kind of animal product. She's fish and she's some cheese.
Huh.
So she did add some things in for quality of life, because I got to a point where I was like not drinking any soda and vegan and eating all whole foods. And I did it for like 6 months, lost all the weight, and said, well, this sucks. I want to go eat something, processed or something. Have a cola. I almost went too extreme and had to rebalance it.
Right. Wow, that's interesting. I did not know that. That's good to know. Well, congratulations. That's fantastic.
Yeah, I think I had a good edge on Beyond Meat with that, and then throw some moving averages and what I knew about veganism, and the Beyond Meat was a trade that really helped my year this year.
Yeah. Oh, the 30% trade?
Yeah, that was a great cushion going into the meltdown.
Hey, let me ask you guys a question real quick. So what got y'all back in going long after the meltdown, I guess you could say, earlier this year? Like for me, I was February 27th, I got out, and I'm like, I'm not playing this game for a while because it was just way too lock limit up and down volatile. I was like, no, not playing that. And then I was listening to the IBD podcast, Investors Business Daily, and they were talking about how I forget what day it was. It was like, oh, today's the first inside day in X number of weeks, and I was like, oh, okay, I'll start dipping my toe back in, and then I've been good ever since then. I guess that was right after the bottom, so around late March, and April was my best April ever, like best month of all time. Just nice. Right after that.
Yeah, that was a great April.
Oh, it was incredible. So that was a good time for me to get back in. What about you guys?
Yeah, I had my first signal started going off. You know, I expanded my watch list from 20 to about 40 items, and I put some pharmaceuticals on there, you know, Walmart, Walgreens, things that could, was it Zoom and things that could benefit from the meltdown. And I started having some 520 cross plus with the indexes as well. And I had some 520 crossovers for my first signals coming off the lows. It was the fastest signal. I had 520 crosses, and several of my watch list that actually traded well off the 520. So that's what my first triggers were. And then my next triggers were some 1050 crossovers was the next tier up. And some of those stopped out. Some of those worked out. And, you know, I was tearing up with moving average crossovers, you know, purely focusing on a watch list of some of the more safe things to trade during the pandemic and things that all back tested well. And I knew. So really it was my just going with the price action, the back test, and the 520 crossovers.
Yeah, I'm so impressed with Steve. I mean, Steve, you know, I watch his trades all the time, and I mean, he just stayed out of all the drama in March and just stayed in cash and just waited for his signals to come in. And I mean, that was pretty painless. You know, I watched in awe. You know, I didn't do too bad, but I did get beat up in March a bit, especially at the beginning. In March, I started buying long-term calls on some of the best companies out there, you know, like Apple. And I started selling puts, ridiculous puts on really good companies like Disney and Exxon and so forth at really ridiculous levels to the downside. But the premium, because of the volatility, was so high. I mean, the premium annually was 8 to 10%. So I did get in near the bottom on some of those, but with long-term calls and selling, you know, puts way out of the money. And then I caught kind of, you know, we had that bounce. I bought that first higher low bounce off of the bottom, and I did pretty well then. And then as we started to get back up to about that 50% retracement level, I got a little shy. And I entered a few trades, but I missed out on quite a few trades because because my theory on the market, and I had done well kind of off of that higher low there. But I was a little tentative to get back in. I actually didn't. I've had a few normal positions. I've been doing a lot of day trading lately, and yesterday was about the first day that I bought 2 or 3 positions in the same day.
Yeah, I thought you're selling those call options in the heat of the battle was brilliant for a good worst case scenarios. You buy the best companies at the lowest possible prices.
Yeah,
sell the puts.
Yeah.
Right. Yeah. Well, I figured, you know, if I buy Disney at 50, I buy it at 50.
Disney had a crazy 8% move yesterday.
Hey, that was
I don't know if y'all saw that. I had been looking at Disney the last few days, potentially going short it. It was going down. It was below the 10 daily moving average. And I was like, I can't short the mouse. Like, it's my one stock that I'm like, I will never short this stock. It's Disney. And a day later, it's up 8%. And I was like, whew, I'm glad I have that one rule for that one stock. Don't short the mouse.
Yeah, the one thing that me going through endless back testing and studying charts for 20 years plus with all these different things is just like shorting is a tough game to play in the stock market.
Is that not the truth? It is.
back test anything you want, look any way you want to look at it, and you generally get beat up far worse with false signals than you ever can make even during it. Look at that the drop we had in March. Look how volatile. Can you imagine trying to be short and hold that short through March? It's just mind-boggling.
Oh yeah, I know.
Steve, on my show today, I do the little psychology section, and today I'm doing it on one of your posts, but I'll just mention it here. It's very expensive to trade confidently in the wrong market direction.
Yeah, I've learned that.
Man, over my career, every single time, that's exactly what's beaten me up. That and position size. But when I decide that I'm smarter than the market and it can't go any higher or it can't go any lower, and I get that I'm so definitive, and I'm like, this is it, and I make that black and white decision that this cannot, and then I get stubborn. It's every single time. I don't know one time that it's probably ever worked for me, and that's why I just I'm not doing that. I'm just trading my signals. I'm just price action trading, but it's very expensive to trade confidently. Confidently is the key word. I guess you can trade in the right in the wrong direction if you're fluid and open and quickly take a loss. I mean, yes. I know Paul Tudor Jones does a little bit of that, micro losses if he's wrong, but the key word there is confidently.
I had texted Steve one day and I was like, Steve, I'm so glad that you and I met, because it is so much easier to trade with the trend than call yourself a contrarian trader and try and trade the opposite of every trend. Like, for example, I'll never forget this. Well, I've had several shitty trades, but this one in particular, I was at the library with my son one day, and I was looking at my phone while he's, perusing through the books in the, 3-year-old section. And I saw the Qs were up, and I was like, oh, sweet, I better short it. What an idiot. and that literally was my mentality for years, is it's up, I better go short, or it's down, I better go long. And it really was coming across Steve's books and learning about price action trading and trading with the trend that completely changed how I trade. And I would way overthink these things, because it's like, I have no idea which way the trend is going. What do I do? How do I figure it out? And it's like, well, use moving averages. And it literally shows you on the screen. I was like, oh, I don't know why I made this so hard.
Yeah. Once you go in the direction of the trend, the volatility is the next biggest thing you're managing. It's just how will you manage the volatility? How big will you trade? But it's funny how things that you're stubborn in life, if you're an entrepreneur or in business or an employer, and being stubborn and going in the same direction and having believing you're right is a skill in some things, but in trading is flexibility is the primary skill.
Mm-hmm.
I've read somewhere that whatever your big first gain is when you first start trading, you're going to be partial to that direction. If you did it on the short side, like for the rest of your trading career, you're going to be partial to the short side, and vice versa. And I just think different personalities, some people, they wouldn't even think about trading against the trend. And then there's other people like, one of my teachers, Dr. Alexander Elder, it's just in his blood to be a contrarian. And so majority of his trades are against the trend. But it's just interesting how our personality makeup kind of defines what kind of trades we go after.
Yeah, I think Steve said it one time, the best trades are the most boring.
Yeah, I made the most money. You get in a trade, it goes in a direction, and it just keeps going, and that's the best, or the best trades. You're just going about your life, and you're just making a killing. I don't think anything was easier than the 90s. The 90s with the tech stocks and just going in more of an index type tech mutual fund and just letting it run for years.
Yeah. Yep, for sure. Would you have made any different decisions? I mean, based upon what's happened in the last few months, would you made any different decisions, Chris, or how you approach it? Would you have adjusted anything? How about you,
That's
Steve?
A good question. I would hate to say that I was scared out of trading, but I was like, when I saw these lock limit up and down moves, it's like, I have no confidence in which direction things are going. and I don't want to be on the wrong side of this. So, I mean, I feel that that was a really prudent choice for me and my personality in trading. I mean, of course, I would have loved to have gone short the whole time, because looking at it, it's like, well, there's clear short signals that you could have followed, but I don't know. That would probably be the one thing I'd change differently, is maybe just keep a toe dipped in it to see what happened. But at the same point, like, I don't know how much stress I would have had on that because of these moves that were, you know, they were limit up and limit down. And it's like, what do you do with that? I've been listening to the new Market Wizards right now, and them talking about how, you know, they would enter a position and they go lock limit down, and they get out of the position and go lock limit up. And it's like, I don't want that kind of volatility. I don't need that in my life. So exactly. It really, really was best in my personality of trading to just step back like I did. But to, like Steve was saying, maybe look for something I wouldn't have traded normally that would have been a little bit less volatile. That's probably the one thing I would have done differently, is instead of just taking a step all the way back, being like, change asset classes or something like that.
Mm-hmm. Mm-hmm. What about you, Steve?
I think the biggest thing I did, like Chris is saying, I just stayed out of a lot of it. The volatility was just so incredible, and I went away from just single long-term moving averages. Like back in even the past 15 years, you know, you could buy a 200-day moving average break, and it either trended for you, might chop once or twice and go in your direction, or go back under it and stay there. But in this, it was slicing through. I've never seen so many false signals for single moving averages. So I flipped to crossovers to filter out all the volatility. That was one thing I did. Moved over to more safer stocks that were holding up better.
Yeah.
That we talked about. And I expanded my watch list, doubled the size, which could affect me missing earnings announcements, but was able to find the signals. Like, I knew I was going to try to tear it up. I knew there was going to be great opportunity. I thought the market could very easily crash 50% down like it did for the internet bubble and the 2008 meltdown. So I thought, you know, we get down 50%, the opportunity is going to be astounding. Like a Disney, like you said, Disney could drop 50% in price if it went from, you know, 150 to 75. If it went back up to double again, that would be a 100% return after falling 50%. So I thought this is going to be an amazing opportunity. So I started getting my 520 crosses and 1050 crosses ready, so I could eventually catch the right ones. And I was ready to know it was going to stop me out. You know, I'd get in and stop me out, get in and stop me out. But at some point, there was going to be some monster run-ups, and that's what I was just licking my chops for.
Well, I think you did really well, Steve. I mean, to me, I couldn't see any improvements. I mean, you just played it perfectly like a fiddle. I was so impressed.
After initial getting stopped out of a bunch of things early on, it just knocked me in cash and kept me there for a while. And a few chops came in, then had some nice moves for a really great April. And I think I'm fortunate that I got to live through the trade through and invest through the 2000 meltdown and the 2008 financial crisis. And I think that educated me on knowing how this is going to play out eventually.
And you know what a lot of people don't talk about or just maybe discuss enough, I mean, they do in Market Wizards, is the emotional capital. I mean, the not having to go through the stress when you were just sitting in cash and not having to wake up and going, oh my gosh, what's happening? What damage report? You know what I mean? I mean, it was insane. A 3,000 point up day, I think we had, and like every other day was 1,000 or 1,500, 2,000 point day. I mean, it was incredible. I
think the height of stress is where you see a gap up like at 3,000. You got getting the temptation to short. Oh, you start having those temptations like, oh, I got a short. Of course it's going to go down. This is a huge way to make money. And you get the temptation, but you don't. And then it gaps up 3,000 on the Dow. You think, oh my God, you actually get stressed thinking, what if I would have shorted that? You know, and you start getting stressed, not even in something, just watching the volatility stresses you. Or the ultimate for me is when I go make sure I'm not in any trades. When the market is so volatile or moves so strongly, I double check and make sure I'm not accidentally in anything. And when you're not
exactly.
Hey, can I ask you guys a question? So I have found that whenever I look at my open positions, like it gives me a lot of anxiety, like looking at charts or things like that, because it's like, oh, is this working? Is it not working kind of deal? So I've got to the point where it's like, I don't want to look at my open positions. Like I have my signals, I'm not moving, until I get that signal. So I don't want to go and see if it is or isn't working or not working. Do you guys do the same?
Yeah, I think it's very important to know screen time, like what Greg talked about, is the positive mindset and the psychology of trading. You don't want to expose yourself to unnecessary stress. If you're an end of day trader, there's no reason to stress yourself out all day about a position. You step in once a day, look at your positions, take your signals, and move on with your life. If you're not a day trader, you should expose yourself to stress or screen time more than is necessary, especially when you're starting out. And position size too is like the volume knob on your emotions. If you get position size to a place you're still comfortable, but can have meaningful wins and losses in dollars, that's a good zone to be in. To get your emotional knob turned down, you don't expose yourself to anxiety needed. But Greg does a good job explaining, positive though. You got to stay positive. If you are up, a big gap up, you may want to go look at your account when your market gap's up. It's a good positive reinforcement to see how you can win and how it feels. So you should feed your positivity, but keep your negativity and losses down to a minimum and what's needed.
Yeah. Chris, when you're saying you don't want to look at your positions, do you mean the P&Ls on your positions or just at all?
Well, because I trade mainly options, it's not a 1-for-1 like the stock, right? Yeah. So that actually, in my opinion, helps me, because then I'm not like, oh, I'm up X number of dollars today. Oh, I'm down X number of dollars, because I really have no idea what the options pricing, what it looks like compared to the stock. I have an idea, but I don't have like a number.
Right.
But like for example, like if I'm long Microsoft or something, I don't like going and looking at what Microsoft did today, because it hasn't hit my signal, nor has it got me out. So it's like if I go and look, then I might be triggered to have some anxiety of, oh, this is working, or oh, this isn't working kind of deal. So that's what I was saying. For me, I don't actually like to look at my open trades, because I don't know if it just messes with my head. I guess it's a way to look at it, because I know what my plan is, and if I go and I start seeing something, I might second guess my plan. Whereas if I just hit my alert, right? If I have my alert to cross whenever, or alert to get out whenever something crosses, then actually going and looking at it doesn't serve me at all.
Yeah, I mean, whatever it takes. Everybody has their little tricks, right? As far as what works for them, whether it's wearing their lucky socks or not looking at the chart. I mean, whatever it takes to help you stick to the plan is what's important. When I teach, we do a lot of, bar by bar by bar trades. And every time I do that, I think to myself, man, it would be so much easier to trade like this. Just you placed your trade, you see what happened at the next day. Like, it's so much less stress. And I say to myself, well, Greg, you can do exactly that same thing, but when you sit and have to watch it all day, up and down, and it would be, I guess I can do exactly that. Just place the trade, look at it at the end of the day. But I mean, I spend a little too much time in front of the screen.
Yeah, exactly. That's where I was thinking too. But it's hard for me too, because I still work corporate finance, and so it's real easy for me to just click over on that other tab and see what's going on.
That reminds me of an Ed Seykota quote, which Ed Seykota is probably the greatest individual trader of our time with his returns. I think he's averaged 40% over 30 plus years, and everybody ever invested with him was a millionaire. I think he's retired from managing money, but he said he traded back a long time ago in the 70s. And he said having a Quotron on your desk is like having have a slot machine on your desk. He was an end of day commodities trend follower. And the more I've talked to people that have actually been one-on-one coached by Ed Seykota and messaged me and known of him, it's like his entire trend following system is just based on risk reward ratios. He took some guy that talked to me, said he asked him how to trade Apple, and he didn't even look at the chart or anything. Said, well, just buy Apple when it breaks I don't remember what the exact number was. It might have been, breaks a 50-day high and then sell it when it breaks through a 25-day low. And that was it. And I heard that in real time. I thought, that's crazy. How could he do that off the top of his head without even looking? He doesn't even trade stocks. And I followed the trade, and that's what he did around the time it took off like a rocket. And it worked out beautifully. And that's what the greatest trader simply used that kind of a system. That's incredible how and he just believed the end of day prices. I heard many stories, from market wizards and stuff where somebody would know he was long something. They'd be locked limit up day after day after day. And, they were shorting it, or they couldn't get out of their short. They were trying to figure out when to buy the pullback. And Etsukoda was just sitting calmly, locked in the direction of the trend for days on end. That's just that's just incredible that's how one of the greatest traders alive trades. He's not sitting at his. So that's just incredible.
It could be so simple. We're just our own worst enemy.
Yes.
We are just our own worst enemy. I see it time and time again, and it could just be so simple.
I totally agree with you. So that's why I've really backed down on my screen time is for that exact reason. So it's like, and it's funny too, because like I have to sit there and train myself, like train your dog to be, outdoor trained or whatever. I have to just like, hey, look, there's no reason to look at this. I don't have an alert going off. There's no point in looking. It's just going to give you anxiety. So yeah, just hang out. And it does have a lot to do with position sizing, because I've changed up my position sizing a lot in the last, 2 years or so. And now, like when I get a loss, I don't even care. I look at it and I'm always like, okay, that's fine, and move on. And that's the opposite of what I was before, where I remember there were so many nights I'd wake up just like, oh my God, what have I done? And nothing's actually happened. It's all in my head, but what if it goes down? It's too long or whatever.
One thing I had to quit doing about a decade ago was quit watching financial news. I mean, it can get narratives stuck in your head and can completely mess you up with the price action. And I had to just I'm just now getting back into watching some Fox Business just for entertainment. And I did find CNBC entertaining during 2008. It was like watching sports every day. But, it's dangerous, especially early on, to get yourself exposed to too much information that could affect your judgment and not have you follow a system and not take your signals out or get a bias. That's the other thing, most dangerous. So many people on Twitter had such a bearish bias. Which I was like, Greg, I believe it was bearish. This is a freaking Great Depression, second coming. We should logically see a 50% drop overall. And, that's what I believed, but it had nothing to do with how I was going to trade with the signals. So you have to be very careful to get a narrative stuck in your head or get a bias because of what you believe. That's another big psychological weakness.
100%. I was listening to a podcast from Jeffrey Gunlock, and, obviously he's well-known and excellent financial guy and good macroeconomic from Double Line. And, he's short the market right here. And it makes you think, like people like Warren Buffett not buying here, people like Jeffrey Gunlock being short. I mean, that seeps into your head.
Yes, it does. Absolutely.
Yeah, I know whenever I'm going against Warren Buffett or the Fed, I know, well, that's not good. I posted this button meme that had, two different buttons, go fade Warren Buffett or fight the Fed, and Facebook flagged it for dangerous content that could cause physical harm.
Oh, dude.
I saw that. I wasn't even sure so that was real?
Yes, Facebook, and he threatened to shut down my Facebook trading group for posting it.
Well, Steve, you were dangerous.
But I guess it is that dangerous to fight Warren Buffett or the Fed that Facebook would remove it.
Maybe it's a bigger conspiracy that we don't know about, Steve. They were watching you.
Maybe you're onto it, Steve. They're like, Steve Burns is onto it. Shut him down.
I couldn't even believe that. I've never had a warning like that in 10 years on Facebook. It's hilarious. I couldn't believe they chose that of all the posts to ever ban me from.
Because it had the word fight in it?
Yeah, I guess it was. Yeah, I guess that was the algorithm. Maybe that's what fight violence. That's crazy.
Wow. I had my first little run-in with censorship this year, and I'm not sure what I even did. I don't know if I'm not even going to say the word, but the situation that's going on right now on my podcast, because they weren't sharing it out to my subscribers. And I thought, and I actually talked to somebody. I was like, I show my friend's website. Could that be it? That's your website, Steve. I thought maybe that's why they were doing it, or maybe because I mentioned the words of the other thing that's going on right now. But yeah, luckily I got out of YouTube jail, but that's disconcerting. I'll tell you what, when you don't know what you've done, it's not like I swear on the podcast or I couldn't think anything I would have possibly done, but I thought maybe it was sharing Steve's website or maybe it was mentioning the unmentionable word. So I'm really careful about that now.
Yeah. Well, I didn't realize that Steve was such a troublemaker here. I may not have to have him back on the show anymore.
Edit out the word fight or fed on this, or edit out fed fight on this.
I think every word Steve said needs to be edited out. Just several minutes of blank airtime.
Yep. Well, it's nice that the markets are up. It's nice that they're green. It's nice that I know Steve has some good trades today. I know I'm having some good trades today. I hope you are, Chris.
Well, let me go on my account that I don't want to go into unless I get an alert.
Don't do it.
You triggered it.
You baited me on that one. Yep, I'm up for the day. That's a good one. Okay. Yeah, I tell you what, April was incredible. I'm so grateful that I had decided to jump back in because it completely turned around my account. So yeah, I'm pretty stoked about that. Just hoping to keep the win streak alive, I guess you could say. But, also following the signals, having a plan in place and following those signals and then taking those tiny losses, like I was thinking about earlier, they don't even impact me anymore. So it makes a huge difference.
So much of it comes back to the math. So much of it.
100%. It does. We were talking earlier about things that we would change. The one thing I was a little late on doing, but luckily I did eventually, was adjusting for position size or adjusting for volatility. And, the more I thought about it, it's just like, regardless of what the volatility is, you should have that maximum loss, just buy fewer shares if the volatility is higher, just to standardize everything. That's the one big, I've been trading for 24 years, but in this, when things go on for years and years, you're not as detailed to them, but this really brought it home, was regardless of whether volatilities are high or volatilities low, position size accordingly so that your loss is standardized. If you're taking $1,000 loss, you're taking $1,000 loss, whether there's no volatility or big volatility, and just keep it all tight.
Yeah,
I agree completely. That's one thing I've gotten to do, just standardization. I want to maybe lose $500 or make $1,500, $2,000, or lose, just try to keep that risk reward ratio right. If I have a potential of losing several hundred, I want to have the potential of making at least double or triple that, and then every now and then 5 or 6 times that. And that's really all profitable trading is.
Yeah, for sure. For sure. Well, we've all learned a lot through this, and if we survive it, we'll be better traders. I mean, any adversity that you go through, or this kind of stress and this kind of market, if you can come out the other side, even if you've lost money, you've gained some insight that will hopefully help you in the future.
Oh, that's really, really well said. I mean, if you can get through this market and keep an account without having blown it out, there definitely were some lessons to be learned along the way. So, yeah, good point.
Yeah, and if you're positive for the year, you are likely beating Ray Dalio and crushing buy and hold investors and beating the SP 500 index. And those are not easy feats, I assure you.
Yeah, Ray Dalio was down 20% last time I checked.
Oh, wow.
And he's got one of the best long-term stable records of anybody. He said it completely caught him flat-footed. He did not comprehend how this happened.
What I noticed he said was, I saw it coming, I just didn't express it in a trade.
Oh, that's smart.
But he was so bearish the end of last year. I mean, he was like bearish, and he kept flipping. He was like bearish way too early.
Well, that's what I mean. He was bearish. I think maybe he got stopped out. I actually have a client that knows him, and he was telling me about it, which was kind of cool, actually. But he said, I saw it coming, but I didn't express it in a short trade, which is the worst when you have a good trade idea and then you don't express it, and then it does exactly what you thought it was going to do.
Yeah, a lot of people don't understand too, the Paul Tudor Jones big short where he doubled his entire capital and management in October 1987. He was bearish since 86, and he kept having issues. with getting stopped out. And Jesse Livermore started being bearish a year before the stock market crash. And even the best short sellers that ever lived, went through long periods of time, sometimes up to a year, getting false signals and false signals and false signals before the final collapse came that they knew was coming. But even they couldn't time it, and those are the greatest short sellers that ever lived.
Yeah, really goes to show you people like that, individual retail traders, boy, how are they going to do it if those guys can't do it?
There's so much the emotionality that comes into it, right? Because it's so easy to go onto social media or CNBC or anywhere else and hear that narrative, like I mentioned earlier, and like get that in your head. It's like, oh, I got to be short, okay, but the stocks keep going up, so I'm just gonna go ahead and take this short position here, or not take any position or whatever. So yeah, that I've done a lot of cutting back on my scrolling on social media. I've deleted all the CNBC apps and things like that from my phone. Steve, I don't know how you actually keep that on your phone, because every time I open it, I'm like, okay, here's someone's opinion on whatever.
Yeah, I quit watching CNBC completely because of that one reason you're saying, all the talking heads and all the ridiculous opinions. But I just use it purely for informational purposes only, quotes and news only. And I don't trade the news. I just use it to know what's going on.
It seeps in. I don't care who you are. It seeps in. This person said this and that person said that. And I mean, I remember looking at a statistic that when you have a huge waterfall move down, like obviously like we did, and we have the rally, 70% of the time you test that bottom, and that narrative is going to get in your head too, as far as taking your long signals.
Yeah. And that's why having the plan makes it so much easier, because now you don't have to worry about it.
What I found so fascinating is within days of the bottom, everybody I knew was people I've known for forever who never even talked about the stock market messaging me about, should I get out of my 401k, or they were trying to buy the bottom. The best poker player I know was talking about buying the bottom within days of the bottom, and the best sports bettor I knew was messaging me about buying the bottom probably within 48 hours of the bottom. And they were the only two. I'm thinking the way their brains work with sports betting and poker, they knew the risk reward ratio was so good at that point. It was absurd. But everybody else I knew was wanting to dump all their 401ks and their investments. It's irony how those pivot points work out.
Yeah, this was a master class in trading and psychology over the last few months.
Mm-hmm.
And just fear of health. On top of that, the fear of health and the collapse of ecosystems and supply chains and businesses, and it was a peak fear of anything I've seen in my lifetime.
It's absolutely right. It is absolutely right. Yeah, it's been an interesting time, and yeah.
Well, guys, I think we could call it a day here. This has been a really great conversation. This is what I was wanting all along, was somewhere where we could come and just hang out and chat, and not necessarily have it be a structured thing, but more just like what's going on in our worlds, and have it be an episode for our respective followers to kind of just be a fly on the wall and hear our opinions and get some backgrounds and things that they wouldn't get elsewise. So thanks for doing this again. It's so great to be able to chat with you guys like this.
This was great. This was cathartic for me.
Yes, it was. It was therapeutic.
It was. It was, for sure. Well, thanks for putting this together, Chris. Really appreciate that.
Absolutely. My pleasure. Thank you guys for coming on and making time for me.
Always great to talk to you guys.
All right. We'll see how the
U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.